So you have nothing on yet. I know I have nothing on yet.
Nasdaq's moving on back down. It's actually hitting the 0.7 deviation level. It's almost to its low of this morning on the open.
Okay.
So if it can bust through, I mean, really, we're looking for a breakthrough 4,600. Okay.
Okay. We're at 4603 right now.
4,600, which I mean, it's working on. Then I think we're gonna move on down, and it's not gonna be massive. We're looking at 46. 89, about 11 points.
45.89.
So, 45, I mean, yeah, 45.89. Yeah. And it's got some new glasses.
Yeah, and that's right. That's right as you come into the low from yesterday's close.
Yep, and it's also a one deviation move. It's also the low of a volume profile.
So when you say one standard deviation move, when is that calculated from? The open or like where?
The applied deviation move, basically, it's like a standard, but it's using implied volatility. I calculate that at 8:30.
8:30. Okay.
Because what I do is I wait for the options to actually open up and get some trading on them, so we have an accurate IV number. And but it's measured from the settlement of the previous day. So whatever time settlement is, so at 4:50, so I calculated at 8:30, okay, but I use the IV from 8:30, but I calculate a one deviation move from settlement. So in this case, 4:15 on Nasdaq.
Okay. I'm just looking. Okay. That's it. I just wanted to see where that was. Yeah, and by that point, the Nasdaq had already spiked up basically to almost their highs.
Yeah.
Okay. Cool. Yeah.
So basically this, but I mean, I carry it forward to 8:30 every day. So it's from 8:30 to 8:30.
Okay.
So I'll use that well throughout that. And see how it hit that right there, and now it's bouncing off of that 4,600 level.
Yeah.
So that's what it's going to have to bust through. We're getting really just flat volume. Like the volume really is not fluctuated at all. Since really that last move down. So if the volume can pick up and bust through 4,600, then we got not a huge move.
Yeah.
But we have a move that we can make a little bit off of.
And so you'd be looking for those 10 points maybe to 45.89.
Exactly.
Yeah.
Yep.
Good.
So.
And what
we're
about
gonna do that? Then we got to find the right contract.
Now,
so,
when you're trading, I mean, my dad and I love the Nasdaq ones just really because of volatility and.
Well, now that they changed them, I've literally been on them for 2 years about changing the point value.
Yeah.
And once they changed them down to 0.1, the Nasdaq spreads became worth trading.
They really, I mean, they're the most exciting product on there, I think, right now.
And I talked to them. The next ones they're working on now, they're working on silver, copper, and a couple of the other ones like DAX and FTSE and all that stuff. So if we can get those moved down, then those are going to be some great products. So now we're hitting on it a little bit.
I'm watching it, I know.
Volume. So
those are a couple big bars. I mean, you're down 17. Here we go. You're down 17 points in the last 10 minutes in the Nasdaq 100.
So just trying to read it and lay it out. And one thing you want to do.
So how are you gonna choose to profit on maybe that move over the next 10 points? What are you trying to trade?
I'd go in and I like to trade the spreads, as you know.
Yeah.
And so I'm gonna go in there. I'm gonna choose my live account. Let's see here. I'll pull up.
I mean, there's one spread right now that's for the daily 40-point spreads that's right in the middle, basically, from 45.80 to 46.20. Would you do a trade where you're coming in right at the middle of that spread, or are you trying to look for premium on either side?
I love premium.
I know you do.
The more premium I can get, the better. At the same time, I like to also have a little room to make some money. So, I mean, the easiest one, because we're only going for 8 points, and I really want to be out of this trade when it hits that, because I don't think it's going to go further. So I'm more likely to check out this 45.80 to 46.20 contract.
Yeah. That's what I'm looking at right now. I may put on a contract or two right now as we talk about it. That same right in the middle.
Yeah, that's what I'm doing.
I mean, it's just going to move. That's a straight futures play like we talk about. It's just going to move exactly with it.
Exactly.
Yeah. All right. It's Daryl Martin, Tommy O'Brien. We'll come back. We'll check out the NASDAQ. We get a flat market on a Friday. Come on back. Welcome back. Tommy O'Brien, Daryl Martin. So did you get in that trade, Daryl?
I am in that trade right now. It's heading south. I've got my finger on the button. I'm ready to hop out. I'm just watching it right now.
That's what I was going to ask you. I just wasn't quick enough. It was as it was trading to get into it is what happened. As I was pulling it up and finding the contract, and you really just got to be ready, especially if you're making a trade in this fast market, 4, 5, or 10 points to make sure you're getting in before that move. Or as it happens, as you want it to happen. As you see the acceleration across that point. By the time I pulled it up, it was 2 or 3 points past already, and it was,
Yeah. So I mean, it moved on down. It's coming on down there. I'm really like, should I take it? I'm waiting for it to come on down. I got a couple more points left. I'm not sure if I'm going to be disciplined enough to wait for it, but I'm watching.
Now, what is interesting, just to go over exactly how, and this is how, they can come over to TFNN, they can click on the Nadex button, they can go over to Nadex, they can open a $25,000 play money account, really get used to how these things move. But you see, so we got in right, you got into the market right at the middle of that spread, basically, pretty close to it. Now,
by the way, I'm taking profit right now. I just don't know how much further it's going to go. So I'm going to grab my $300 and call it a morning.
That's what, so, and is that 3 points that you got out of the contract?
Yeah. I got 3 points out of it. So, well, a little bit, yeah.
Now, what's nice to look at is that, you're basically covering yourself on the other side. Now, you're not getting point for point, though, in a 40-point spread when it makes a big 10-point move like that, because there's still going to be premium in there. And just going, so right now it's at 45.93.3, but the contract's only at 45.96, and that's because it's closer to the 45.80 lower edge of that, right?
Exactly, yeah. So, and one thing, I tell people, when you trade these contracts, I mean, they are options. So you really... It's sort of funny because, like, in the option world, you don't see people trading like Apple and looking at like the call option contract, and looking at the chart of the call option contract, right?
Right.
They're looking at Apple,
right,
and then they're looking at the call and they're looking at the price and they're deciding what they're going to do. Okay. Whereas on Nadex, people go in and they try to look at that price of the option. They get all into it, and I'm like, you're day trading. You got to trade off the chart.
Yeah.
So it came down. It hit right in my zone, my profit zone right there. I got like about a point or so above and below the one deviation level. I got low volume area. I mean, or from the volume profile. Basically ice right there. You just, like I said, low a days, all that stuff we're putting together.
And you got it in like 4 minutes, 5 minutes too.
Yeah.
Which is worth.
I mean, we're not talking like I spent a lot of time making a few $100.
Yeah. When it's that quick, it really is. When you hit it that quick.
And I don't worry about, like, is my spread at the price I want the market to go down to? You can lose a lot of money waiting on that spread to get on down there.
Yeah.
And so I try to not let that be my
I think that goes
factor.
well with what you say about taking 80% of maybe your hopeful profits or your ideal target, maximum profit, shooting for that 80% barrier, because that helps make up for that same deal and that last 20% of hope where you're hoping it's the last, you get every penny.
Yeah, I mean, let's look at some timestamps here. I mean, I got in the trades at 10:19.
Okay.
And actually, I had it set the default to 1, so I had to go over and change it to 10.
Yep.
Because I wanted to get at least 10. I was actually going to try to do 20 contracts, but by the time it was there, I was like, I'm not going to add in at this point. I'm already lower than I want to be.
Yep.
And I mean, you see my first one, I got in there 45.99.9, 45.98, and then I got in like 10 at 45.97. So it's already like a point or two. It's $20 I already gave up on. It's $200 more I would have made.
Right.
But that's just a trading error. But nothing like a trading error costing you $200. But at least it wasn't a loss. It was just profit not made. But,
which is important. That's a big difference. It really is.
But I mean, from beginning to end, we're talking, basically 5 minutes.
Yeah.
And still made a few $100. Would have made about, 500, but still made a few hundred.
Yeah.
But made a good call. You can see right now it's pulling back up. I got out of the contract down there at 45.96.5. So, and we're at what right now? We're at 45.96.8.5.
Yep.
We're sort of floating right around that area.
8, 9, yeah.
So, it's just floating right here. I mean, hey, it may keep going down, but that was my target. It went down. And
it really has sputtered. I mean, in that 5 minutes, it made the move, like we say, 70 or 80%
that was
of
the easy money. It was falling between those two zones that we were looking at. And I whenever I give a price, like if I'm looking at, okay, I'm going to get out at 45, 90 or whatever. I mean, I add a couple points, subtract a couple points from that. So I have you sort of see on my chart how I have like these blue lines up around the deviations.
Yes.
So I give myself a little bit of leeway. I'm not trying to get like to the tick.
Right. That, yeah.
I think that's just a very costly mistake that I've made in the past.
Of course.
And so I've learned to give myself a little bit of a zone versus just an exact level.
And it is, it's because it's not an exact level. There's too many things in play, as in looking at the context.
If come down and hit it, it'll just like that last point or two is not going to be worth the stress.
Right. All right. Daryl Martin, Tommy O'Brien. We'll come right back. Come on back. Flat market on a Friday. Welcome back, Tommy O'Brien, Daryl Martin. So have you been trading anything besides these Nadex spreads? Nasdaq spreads? Have you traded gold at all? That's what I was just looking at.
Oh yeah, I love gold. So gold has really tight bid offers as well over on Nadex.
They do, for sure. And with the types of moves they've been having this week, today it's pretty calm.
Even natural gas has actually had some really good moves this week. So they've been slow, but they've been big, like day after day.
And so when you're trading those, you're doing similar to what we just talked about, looking at deviation levels and looking at those different profit targets, or?
Exactly. Yeah.
Okay.
So I go in, look, I'll have some zones I usually want to see broken, and when especially when they all sort of pile up on top of each other, I love that. So, I mean, like today, we had, for our zone right now, it's still just hovering right at that level. But we're literally talking about yesterday's low. We're talking about a one deviation move. Like literally, the one deviation is 45.89. Okay. We're also talking about the low of the volume profile. All three of those low levels all came together at one place.
Okay.
That's going to create a lot of what like your dad talks about a lot, ice, right?
Yeah.
And so it's going to be really hard for it to break through that ice, but it's going to be attracted to it. There's going to be, algorithms are going to move for one deviation moves.
Okay.
Any kind of quant trader is going to be using one deviation moves. Volume profile. A lot of people use volume profile. That's going to cause a little, that's basically where it's a deviation of volume of the concentration of volume from the previous day. Okay. And then you have basically just a support zone, which is based on, basically yesterday's low in this case. So there's a lot of orders down there where people were buying, and there's a lot of.
No, it just makes common sense.
Buyers
it does.
and sellers and everything right at that point. So you put all those pieces together and you get a lot of orders. So that's going to attract the market to that level, but it's also going to be a level that is going to be a lot harder to break through because the market wants to go to where orders are. So it goes to where those orders are located. And that's why it exists. Markets exist to fill orders.
Right.
That's why people come together.
Supply meets demand
to buy and sell. Right.
Right.
So the market goes down to where the orders are. When it hits that heavy order zone where all those different pieces are all coming together at one time, then it'll go to it rather fast, like we just saw, like in 4 or 5 minutes. We didn't wait 5 hours. And I was even sitting there thinking, I'm like, I wonder if I should use the 2-hour spreads.
Yeah.
Because I thought it was going to move pretty fast.
Yes, definitely. We don't talk about those a lot, I know, but I trade them sometimes for sure because you're not planning on being in it all day. You're paying for the premium to be in it all day, basically. So if you're not going to be in it all day, then yeah, you can. Right.
The only disadvantage to the 2-hour spreads is they're narrower.
Yes.
And so you get your major movement in like that middle 70% of the spread.
Yeah.
So let's say it's a $100 wide spread between $30 below the ceiling to $30 above the floor. That's where it's going to move pretty fast. Everywhere else is going to move really slow. You're going to get like a delta more of, because when you're at the floor ceiling, you're at like a delta of 50.
Okay.
So if you think of it sort of like a call or a put in that sense, that you got 2 points where you have a delta of 50, and then it goes to like 100 delta in the center.
Yeah.
Okay. Then the closer you get to the floor ceiling, then the lower your delta gets, so it moves a little slower. So that's the one thing I like about the dailies. They're wider.
Right.
So they move faster. So I usually just default to those unless I feel like I have a lot of time to really analyze it.
I do too, because then it's just trading point for point without that trail off like you're talking about.
Yeah, people are talking about it being complicated. I'll go in, I'm like, it's really simple. You go and choose the end-of-day spread that's near the center with close proximity, and premium is either in your favor or it's, maybe 5 ticks away.
It's close enough, right? And if you're just trading in short, you're just going to be able to get out with the same premium.
Exactly. I saw some big premium spreads when we were looking at this to begin with this morning. And I saw some that are like 80 ticks premium and stuff like that.
Wow.
There's some big premium spreads. There's 50 ticks right now on the 4600 to 4630. That's a lot of premium. So let me show you this real quick. There's a ton of premium.
I'm pulling it up as we talk
but it's not going to move fast. So that's time decay. That's time value.
Which spread did you just say had the 5 points in premium?
The 5 points in premium is going to be actually on our. It's a 415, the 4600 to 4630. So we have that one, and we also have the 4600 to 4640. So there's this is actually a good lesson. Here.
No, I like this when you compare basically similar spreads except 30 points versus 40 points. Yeah.
Exactly. Anytime I'm collecting premium, if the premium is about equal, which we're a couple, like literally 2 ticks, $2 off, I'm always going to go with the one with less risk.
Okay.
There's no financial advantage to choosing that one that requires me another $100 to make money on. So it's tying up more capital, so my ROI is going to be lower.
Yep.
If there was some weird flash, I guess rise in this case, not crash, but you know what I'm saying?
Yes.
Some big flash move, at least I have $100 less risk per contract.
Right. No, less risk is always a good thing. You'd be hard pressed to talk me out of that. Seriously, it is.
So, it'd have to, I wouldn't hold on to the thing for, 24 points, but maybe 5 points or 6 points, whatever, against me if I was actually going to do that trade. But if I look at this, and this is the benefit of using something like the scanner, is you see, hey, okay, that premium's the same, but one of them requires $100 more. Well, if I'm going premium collection, I'm always going to go, if I can get same profit but less risk, choose the less risk one every time.
Right.
So, but that's not bad. It's like 4 points up, and you're selling it 5 points higher. I mean, we're selling at 46.05. The market's at 46.90. Well, it's almost like 9 points above where the market is right now. So it's not a bad trade. If you want to go for premium collection, if you think it's going to stay below 46.05,
yeah,
which would basically be, a little bit, below the 0.5 deviation level, which, there is quite a bit it has to break through to get back up there.
Right.
Then that would be a way to do the trade. And you can even look and see if there's anything on the buy side. There is no premium collection on the buy side right now. So there's nothing over there. They're really, that's just
it would just be selling it to collect it, right?
Yeah. And that's mainly because of where it's at. People are like, well, are the market makers trying to screw people, mess people up?
Yeah, no, it's just understanding how that premium applies. And I think this is the perfect side where you need to, play with that demo account and get used to, as the spreads are towards the high side, the low side, how that premium shifts. And that way you understand basically what you're getting into and understanding your strategy and making sure you're employing your strategy correctly, right?
Well, notice over here, like on the premium side, I was talking about the floor and the ceiling and the delta getting lower, right?
Yes.
The delta getting lower basically means the premium is either getting higher or, more expensive, depending on what side you're on. Notice on our sell sides, all of our profits are less than our risk. So risk is greater than profits on the sell side.
Yes.
Meaning we're closer to all the floors, okay?
Right.
Notice on the buy side, all of our profits are much greater than any risk that we'd put up. Okay?
Yeah.
That's because we're closer to the floor.
Right.
We're further from the ceiling. So therefore, there's premium that you're having to pay on the buy side because you're close to the floor. You're closer to that 50 delta. Okay? Anytime you're at the money on an option strike, your premium is going to be higher. So that's why you're actually able to collect premium on the sell side or pay it on the buy side. In this case, a way to look at it as the seller's taking on more risk, so they got to put up more premium. Or they actually get to make premium because they're taking on more risk.
Right. And that's what
buyer's taking on less risk, so they have to pay some premium because they have a much better risk-reward ratio.
And I like to use that same thing with saying, somebody else is going to be taking the other side of that trade, and they're giving you that opportunity to still have that option in play. And that's where you understand, well, there's still, not tremendous value, but there's still value in that option because there's so much time left. And so no matter how far it goes, it's never gonna, and that's just like you say, the delta, it's just gonna stay in that, whether it's a point or two or where it is.
Exactly.
Yeah.
And looking back over sort of a little quarterbacking of the trade that we did, it went on down. It actually did hit the low of 45.90.75.
Nice.
So we got within 2-3 ticks of the exact level we were identifying.
And you got out within 2 ticks within of that. Yeah.
Exactly. So about a point or so of that, and I just saw it basically oscillating. It hit right on that zone. It was just starting to oscillate a lot.
And that's where I think if you start to, because I'm looking at it, and it's doing the same thing with saying, would I initiate this trade? And you had gotten a lot of your move. You wouldn't have initiated that trade right there looking for 2 points, and then so it's
Exactly.
For people struggling to keep up with all the math that we go through and the risk reward and the ROIs, it's just applying that simple principle of, what is my
risk?
risk?
I sell right now?
Right. What is my risk? And that's what you're putting up. And what is your potential reward? And that's constantly changing as that trade either is profiting or is losing money. And you just you want to be examining that at all times.
Exactly. So if I see it getting right within a point or two of my profit goal, on the chart, and because I don't make my profit goals based on P&L, I always make them based on the chart because you make a lot better decisions that way. And so it comes down here, it touches this, it starts oscillating, and then what you're saying, which I think is a great way to look at it, is go, okay, at this point, I'm trying to decide, do I hold on for 2 more points or do I get out of the trade? Okay, because what I don't want to do is give all my profit back.
Right.
But I also don't want to be so scared that I grab profits too early.
Right. And
so I look at this and I'm like, I'm 80% or more than 80% rolling in my profit goal, which usually is when I like to take profit and, price level profit goal. And then the next thing is what you're saying is, hey, if I look at this, would I get in right now for those next 2 points? And if I wouldn't, and I have any reason to be cautious, it's time to hop out.
Right, and that's it. Just puts you in that mindset of at least being able to say, okay, there's no way I would enter this new, so I need to be definitely alert enough to exit this trade. Basically, that's how I try to
exactly. And I
in
would
my
have
own
given up
mind.
quite a bit. I mean, now I'd be down another, $140 of my $300 profit. If I
And
would've
it's
held on
that
to it.
quick, and it's popping, right? It's moving.
Yeah.
I mean, it's going to be gone. Yeah. And then, it goes right back up, and that's the other thing, like you talk about, you make that trade again because it was 5 minutes.
Exactly. And I mean, we're talking through it, so I'm not trading as actively as normal, but I mean, you could be looking for that bounce right off that level. You take another trade, and you can take it with a pretty tight stop, with just a few points right there, and go long and go right back up and make another 3, 4, 5 points. You do that in 10 minutes or so, made another $300-$400, So, I mean, you can, if you'll get in here and you'll not be greedy and you'll trade to levels and hop out.
And that's, I agree so much in that mentality of it. And that's, the demo account gets you used to these things, but still, as you come in, with real money, things do change. So you really want to ease into this because those mental powers at play as you're a point away from your target and the market turns against you, handling those and making sure you have a plan for them is important, and it's not easy. It's not.
And I mean, you can even use the other side of the contract if you wanted to. If you wanted to buy, I mean, you could literally trade the same. A lot of times on these spreads, you could trade the same contract. You may not be positive premium on the way back up, but the premium, you don't make it just because you get in.
Right.
You don't
not when you're trading as quickly as you are.
Right. Now, if I hold on to it for hours, I'll make it or I'll pay it, okay? Because the time decay has to go through. But, I mean, if I want to go long on this contract, I mean, okay, it's, 7, ticks away, NASDAQ ticks away. But it's not like I'm going to lose that $16 in premium because I hop in the trade. The premium, the air doesn't go out of the balloon just because
it's just that market. All that matters is that it's a tight market. Right.
Yeah. So, my daughter gets balloons all the time, and the air stays in them until hours pass.
It does. It does.
So, you got to let that time pass. Then the balloon will deflate. So you either make money on the deflation or you lose it on the deflation. But again, it takes time. So don't let premiums.
And that time is only for the privilege to hold that option for the entire day. So if you're paying it, then you're not reaping the rewards because who knows what the index or the option's doing. But you're paying it for a reason because you have that time, and so maybe it's something that's taking a little bit longer to make that move. I just think the constantly evaluating it, like you're talking about, or evaluating it, especially as it's swinging close to your profit targets or close to where you want to take those stops, and just staying with that plan.